Hey everybody, what's happening? Well, I'm here to tell you what's happening in the financial economic world. And good luck staying out of debt. We've got a price nightmare coming up here. And if you can stay out of debt during these times, then you're doing something right. Let's talk about the car prices here out of the gates here. And there are some predictions out there that this chip shortage may not be resolved for a very, very, very long time. Let's take a look here. CNBC, chip shortage could persist another 2 to 3 years. Major China consumer goods maker warns. Now, there's a lot of things happening over in Taiwan and China. Taiwan actually the #1 chip producer in the world. About 60% of chips, the last time I read, are produced out of Taiwan. And what's going to happen to car prices if we see major disturbances happen over in that part of the world? Recent headlines here. Upgrades for Chinese military air bases facing Taiwan hint at war plans. Other headlines. Will America come to Taiwan's defense? China will lose everything if it starts Taiwan war. So some things are being looked at. Some things are being discussed. Back to the financial part of this, the personal finance part of it, where you and I need to figure out what's going on and how to prepare for this. Continue to prepare because they're estimating 2 to 3 years, and that's if there isn't some sort of war or some sort of other chaos in that part of the world that could really put the brakes on even the current production in chips. All right, so here's what it feels like to be dependent. We're dependent as a country, dependent on other countries doing the manufacturing for us. We've outsourced most of the manufacturing jobs, and even the jobs that are here are under threat because companies don't want to pay the high costs or the wages for the high cost of living that we have here. We're seeing companies go on strike. Companies like John Deere, a lot of workers going on strike. The wages are not enough to keep up with the rising cost of living. And guess what John Deere is probably doing at the top? They're probably looking for other countries where they're going to go, and the people will be happy to make maybe pennies an hour, who knows, but they'll be happy instead of complaining and going on strike. But in America, with prices rising so high, you're going to see people striking and protesting and demanding higher wages and, kiss the current jobs that are here goodbye. Get ready to lose your job. Is your company outsourcing? I'm sure most companies are at least looking at the option of outsourcing, even companies that are here in the United States. And guess what? It's going to make us more dependent on other countries, and things that happen on different parts of the globe are going to impact us here. And here we go, 2 to 3 more years. One of China's largest TV and household goods makers. So what needs to be done when car prices seem like they're not going to come down for a very, very long time? Well, the dealers, the banks, the lenders, they need to find a way to get people into more debt and make it easier for people to borrow money. Take a look at this next headline. Headline out of AutoCreditExpress.com. Ford Credit drops credit score minimum on 84-month loans. Right, 7-year loans, and they have to drop the minimum score. So even stretching out the payment to 7 years, still not enough people were qualifying apparently with the credit score requirement, so they had to drop it. Is that a sign that consumers are strong? Right, think about that. So the economy's strong, it's recovering, right? Well, if that's the case, why is the consumer not strong? So it seems just the opposite. The worse off the consumer is, the more debt the consumers are in, then the better the economy's doing. Because if people are spending money, then companies are making more money. The CEOs are getting bigger wages, wage increases. So the gauge of the economy is actually, the better the economy is, the worse the consumer's doing. If you look at it like this, the more debt people take on and spend it, then the better the economy's doing from the official narrative. And they didn't just drop the score requirement. Listen to this. You no longer have to worry about a minimum credit score if you finance through Ford. This means shoppers looking for a new Ford car or truck SUV may have more options than before, especially bad credit borrowers. So not only did they drop it, they eliminated it. So this headline should have been that they eliminated a credit score requirement. And we told you this was going to happen. You're going to see longer and longer loan terms, looser and looser lending, lowering the credit score requirements, and people new to the financial system are just learning about it. are asking, wow, why would they do that? Why would banks do that? Why would they want to lend money to people with bad credit? Because the banks will lose money if people can't pay it back, right? Wrong. The banks are never going to lose money. You know why? Because the Fed has promised endless support for the banks. It's not me saying that. The Fed came out and say that. Endless support for the banking system, endless rescue programs, endless liquidity. So no, the banks aren't worried about people not paying the loan. Of course, they'll still come and take the car back. They don't want you to get something for free if you stop making payments. But no, even if everyone defaulted on their loans, doesn't matter. The Fed can come in. And that's what happens when you have this type of monetary structure. When you can print endless amounts of money out of thin air, the lending standards can get smashed, right? You don't have to have much lending standards when there's always going to be an endless life support, an endless bailout, too big to fail. The entire financial system, the entire economy is based on debt. When banks stop lending, that's when you see the real implosion. Why? Because without borrowing and spending and taking on debt, most people can't afford everyday items, even groceries. You take away credit cards, most people won't have food. That's the fact. I wish it wasn't true, but it's true. And it's really too bad that most people don't see the scam in all this, right? So even if you're not somebody that has to take on debt to buy things, maybe you have a lot of cash, maybe you can go out and pay cash for vehicles. You're going to be paying more because you're competing now with people trying to buy the same vehicles that can just go out and get no credit score required loans. All right, so even people with a lot of savings that don't rely on debt are still going to feel the pinch. And, I'd like to add that I think it's just sad that most people really don't know what's really happening. How can banks just drop the credit score requirement? Why are prices rising nonstop? Sure, it's about the supply chains and the labor shortage and costs in other areas going up, making everything more expensive. But when you look at the lending system, the financial structure here, the monetary structure, that is the base of everything. When you have endless amounts of money, when you have a complete fiat currency, that creates the possibility of prices rising way beyond what most people ever expected, right? So it's no longer about incomes. It's about how much money and how many endless promises the money printers promise to the dealers, in this case, the car dealers, the mortgage companies, etc. And the banks know that they run the show. Here's a recent Yahoo Finance headline here. Big banks warn that Fed-induced market volatility is coming soon. So they're warning, they're putting it out there. If the Fed is to taper too much or to stop the endless liquidity, the endless rescue programs, the infinite amounts of money that are done in the repo and the reverse repo markets, the banks are out there warning because the banks know that the fake economy collapses, the illusion fades once banks pull back on the lending. So essentially, this is like a warning from the banks to the money printers when you look at the headlines. Big banks warn Fed-induced market volatility is coming soon. Right? Otherwise, why would just some tapering cause the market to be volatile? Right? The Fed is the market. This whole thing is propped up on the money printers. Most of you know that. Please spread the word so people can kind of understand what's happening here. I think the more people find out about this and learn about this, maybe they'll tell somebody else and maybe things will change. But until then, keep preparing, keep stacking, ride the bull. Good luck again. Good luck staying out of debt. Like I said at the beginning, even if you're not in debt at this moment, it's going to be even more difficult when you start seeing prices continue to rise into, who knows, into the stratosphere, the twilight zone. You tell me down in the comments. Please let me know. Thanks everybody for watching. Stay well. Big love. Peace. Bye.